I can all hear me very well. All right, let me share my screen. Screen share. Please, can you see my screen now? Hmm.
Yes, I can see us.
All right, that was good. Yeah, good day, everyone. So we started the course outline too. Oh, sorry. I don't know when I started all this subscription of it in again with me. Okay, now we started with the course outline too. And when we started, we state out that we are done with stage one of the course outline. And in this course outline too, or the course synopsis, we have what is PIP, and that was what we did last. Now today we'll be looking at the concept of bid price and ask price. And also we can lay our hands on spread as well. Then forms of trading orders, stop loss, and take profits. Then we'll stop there for today. And the next one we continue with leverage, which is in 2 days' time. So now let's proceed. Let's continue with our class from where we stop in stage 2. Now the concept of bid and ask price. Please, can you all see my screen? Or I should change the screen to white color so you can all see it. Yeah, good evening, ma. Let me change it to white screen so you can
I
all see
can
it.
see us.
All right,
Okay.
that's lovely. Let me stop this notification, please. Ah, my phone is hanging. Sorry, few minutes, please. Few minutes. I just have to stop this notification. Oh, God. So we won't have any disturbance. Let's continue with our class. That's what was breaking our conversation last week because we were popping in. It was disconnecting me. Now, the concept of bid price and ask price. What is bid and what is ask price? In every pair, there are two equal quotes price. Let's now get to what they are. Bid price. When we say something is bid price simply means the price that buyers are willing to buy at that current price, at that current rate. Are you getting my point? And why the ask price is the price that sellers are willing to sell. Are we together? So a few seconds. I don't know why this thing is popping up. I don't know why it's popping up. Should I rotate the screen? Okay, let's continue like this. Let's continue. Don't let me rotate it. A few seconds, please. It's going to pop up now. Has been overworking, overeating. Okay, now let's continue. So, ask price is the price that sellers are willing to sell. Please write those two definitions. They are very, very important. You will need it in the journey. Are we together? Now let me break it down very well for you. If you look very well, you see that this image here, we have one blue box and one red box. Now the blue box is your bid price. Bid price is always lower than the ask price. Are we together? And ask price is always higher than the bid price. Now I'll break down the definition to you so that we can all understand together. Now, as you can see there, that the blue arrow indicates what? The bid price in the blue box, while the red box indicate the ask price. Let me explain it in a local way for us. So according to a layman explanation now, I'm using my own layman explanation. Let's say you receive a $500 from a friend abroad. Are you getting it? In the morning. and you walk into a bank to exchange it, bank will tell you that the latest CBN rate, let's say, is 380 per dollar. Are you getting it? So they will give you at the rate of 380 equivalent to each dollar you want to exchange. Let's say we are exchanging 500. Do you get it? So that's the rate they will give you. So once you multiply it, you know the amount of naira you'll be collecting. Am I communicating? So then the next day, after 24 hours, you walk into that same bank where you exchanged your dollar to naira. Now you now add an emergency that you need the dollar currency to do some transaction. And on getting there for requesting for some dollars, they are not telling you that their bank rate is 420 if you want to buy dollar from them. So you would now have to pay 420 for that same 500 you deposit, like the 500 you exchange with them at the rate of 300. Do you get it? Now you're not buying it back from them at the rate of 420. You can see that that's a massive loss at the other end. Please kindly mute yourself, please. Please. So you won't disturb the class. So in this situation, 380 naira here is the bid price, and why the 420 is the ask price. Hope this explanation is better. So the difference between this bid price and ask price is what we call spread. Now let me show you when I say something is spread. If you look very well, I don't know if this thing can zoom out. Oh, it's not zooming out. Okay, pardon me, I'm going to rotate it so you can all see what I'm talking about. Let me rotate the screen so you can all see it. You can all see what I'm talking about. Now, very good. Let's look at this image, for example, here now. Can you see? Now, what's the spread here? You're having what? Three. Let's look at Euro USD. Can we all see the Euro USD together? Are we all there?
Yes.
Very good. Now, for the Euro USD, you can see that the right spread is 3. In some cases, they may not write it like spread. They'll just draw a square bracket. You get it? A square bracket facing upside down to each other. You get that in your MetaTrader 5. It simply means spread. They will now write the value at the front of it. Now, this Euro USD here now is telling us that the spread here is what? 3. How did they come about this 3? Is between the ask price minus the bid price. Now, if you look at the ask price minus the bid price, the ask price you're having here is 1.1753 and the bid price is 1.1750. So the differences between them is 3, and which is what our spread. Same thing goes to GPP USD. Are we together? If you look at the differences, it's still 3. Then USJPY2, 3. Just like that. Are we together? Now,
Yes.
I was explaining about ask price and bid price. Now we can get it that the difference between the bid price and ask price is our spread. So we are coming to that so that we'll do a section about it, whereby I will show it to you how it's been done, how to calculate the spread, and also some other things we need to understand. Now let's talk about spread. Let's see what spread is, what it entails. Now, from here, have you ever asked yourself, why is there all this spread in the market? And why does the spread varies in the market? Now, let's go straight to the point. When we say spread, spread is the difference between the bid price and the ask price. It varies. What a bureau de change exchanger will give you here in Kano will be different from what the bureau de change exchanger will give you there in Lagos. Same thing applies to those in Port Harcourt. There will be some little differences. When you combine all these differences, you'll be seeing that the spread are interwoven, like they are changing, increasing, reducing, increasing, reducing. I don't know if you've noticed it on your MetaTrader today. You should have seen such kind of spread, and they are raw spread as well. Now, the spread varies between trading sections. When the volatility is high, please note, when the volatility is high and markets are open at the same time, the spread is always small, meaning that you pay bank lesser commission. That is another advantage of trading when many markets are open. However, when only one market is open or the volatility is very low, the spread is always bigger. That's the quiet markets I was explaining as at last week during our first class. Please avoid trading in a quiet market or a silent market. So that's another reason we are against trading in what? In a quiet market. Because spread are usually big during that period. Only one session is open. In the example I gave above regarding USD to Naira exchange, where the bid price was 380 and the ask price was 420. So to find the spread is to subtract the ask price from the bid price. Is going to give you what? 40. So that 40 is what? Is the spread. Please, do you get that? So
Yes.
that 40 naira that you see as the difference is the spread in between them. So that is what I'm trying to tell you there is that the bank has made a profit of 40 naira on each dollar you are selling to them, or each dollar you are buying from them. So let's proceed. What I actually use as a layman explanation is also applicable in the forex market. So the spread is a profit of the broker. However, in this case, it is very small because it measures in pips. And I've explained about pips. The pips you see are the price you are making. That's the price in the market. Any single move of pips in the market is money. So let's quickly see how to open a trade. I'm just going to make it very brief and simple. Now, let me break it down for you. When you enter your MetaTrader, on any particular pair that you are clicking on, any pair you are clicking on, once you click on it, a dialog box like this is going to pop up. You will see new order, open chart, symbol properties, advanced view mode. The first one is what we are going to talk about, new order. So under this new order, excuse me, under this new order, you will see this next dialog box here. You see this dialog box. It's going to open like this. I don't know why it's shrinking here. It's going to open like this. Now, I'm going to break it down here. Please listen attentively. The first one at the top is called instant execution. Now, this instant execution simply means that you want to enter the market immediately. But if you drag that arrow down, there's an arrow beside that market execution before the lot size. Don't worry, I'll explain everything. Just chill. I'll explain everything. We'll take it slow and steady. Before jumping into the instant execution, let's talk about take profit and stop loss. That's the most paramount thing in the market. You must know when to leave the market in loss, and you must know when to leave the market in profit. Now, it should bring you to this page. Looking down, you see sell on the left-hand side, and you see buy. Can you see it? Sell and buy. That's where we have, where you can select, okay, market execution. That you want to enter that current price. You click on buy if the market is going to buy for you, depending on your setup or your technical analysis or fundamental news. And if you click on sell, still depend on vice versa. Now, like I said earlier, we should not panic. Everything will be broken down into pieces. Let's look at the main topic we want to treat in this content, which is forms of trading orders. Now, part of the forms of trading orders is where we have take profit and stop loss. As a trader, you would not always be online monitoring all your trade. That's just the pure truth, except if you are a scalper. Even scalper self, you can't be online. One way or the other, you'll be distracted with one thing or the other. So it's not as if we as a forex trader just get to sit and stay front of our laptop 24/7. We don't do that. Some of your trades may stay overnight and some may last for more than 2 days, depending on where your profit is, what you are aiming, what you are targeting. That okay, this is my take profits, maybe take profit one, take profit two, take profit. It may vary depending on your position and your account size. Now, take profit and stop loss are forms of market order that's designed to make your trading a bit easier by solving the problem of sitting and watching your trade. Now, let's start with take profit. What do you understand by the word take profit? When you get to this page, when you want to open a trade, pointing in red, pointing is red. In the column, you see stop loss and the blue one is take profit. I'll show it to you. You can see the stuff I'm telling you under market execution, which is instant execution. The red one, the red arrow is telling you that that's where stop loss is. And why the blue one is pointing at where take profit is. Then how do you go about it? Is about calculation of your pips. Are we together? Is about calculation of your pips. Now let's continue. Take profit is a form of market order that tells the broker to close your trade for you and lock your profit when your trade moves a certain number of pips in desired direction. Do you get it? In your own desired what? Direction. Even if you are not online, the market will keep on trading. And whenever it reaches your take profit, the broker close the market for you automatically. Based on what? Based on the instruction you gave on your MetaTrader through your what? Through your broker. Now, let's say you enter a currency pair. Let's call it maybe Euro, USD, or SSS, ZZZ. I don't want to know the pair. Whatever pair you are trading, let's say, for example, now, it's currently on $20 profit. And from your technical or fundamental analysis, you found out that it would soon rise, like the market will soon buy very well. Now, in that process, so you immediately open your MetaTrader after doing your analysis, or maybe on TradingView, or I don't know where you are doing it, maybe directly on the broker site. You click on buy. Remember that in Forex, we always do two things. Either you are buying or you are what? You are selling. So after you analyze, let's say the pair will rise. Then you open your MetaTrader and you open a buy. And your target there is to make what? 50, either 50 pips or 70 pips. Are you getting it? Let's say 50 pips. And you don't want to be greedy in the market. Do you get? So for you to set a profit target, like a target profit of 50 pips, you add it to the price you enter, which was $20. Do you get it? At first, you say that the price is at $20. Okay, I missed this entry, and this thing has entered $20 profit. And all the target I'm looking at is $70. Let me risk so amount of let me risk so amount of my account and enter this trade to eat my take profit. You know that at that point you are trying to target what? 70 pips. Is that not so? All in total. So your TP will be at what? 70 pips. Are you getting it? Because you've missed your entry, and initially from your setup says you have to target 70 pips. But because you didn't set a limit order, you are waiting for confirmation. When the confirmation triggers, you are not online. When you came online, you see that it has even given me, by now I should have been in $20 profit. You get, and your main target is what? 70, and you open into the market like that. So anytime the currency pair that you are using starts climbing and reaches $70, even if you are not online, your MT4 through your broker, either MT4 or MT5, are you getting it? Any of the platform you are using, either MT4 or MT5, through your broker server will close the trade for you automatically using your MT4 or your MT5, and then the profits you are expected to make will be accounted immediately into your balance. Into your what? Into your balance. Once you set it at a particular price on your MT4 or MT5, whether you are online or not, it closes the trade for you and lock your profits. And nothing is going to touch that your profits till anytime you come online, whether you wish to continue trading or you want to withdraw your profits. So when you are setting take profits, it involves pips. So I'll give you, based on all the assignments you've all submitted, I've gone through everything. You all did very well. Honestly speaking, you all did very well. But regardless of that, there are more tasks coming ahead of you. So
Mr. Mashut,
Yes, ma.
your screen is not showing what you're explaining.
Really?
Yes, your screen is
Oh,
stopped at announce price.
can you see it now? Should I stop the screen and start again?
Yes, stop sharing and start again.
All right. So where does the screen stop? Where did my screen stop?
Where the bid and the ask price, that's where the screen has been all along. I was trying to,
Oh, honestly, I never knew. And we've even gone far. I'm
yeah,
even
that's the
explaining
thing.
about take profits. I'm actually explaining about take profits already.
So it was from
I
that
don't know.
bid
Was it
and
my network?
yeah, it's your network because you were saying you know, as you were talking, you were saying it from your own side, but we here, we are not seeing it.
Oh, oh,
Yes, sir.
oh,
And
oh,
I even
sorry.
dropped a message for you in the inbox, but you
I can't
didn't
check
give
inbox
me.
right now. I can't check inbox. I'm using my phone, not my PC. I'm using my
Okay, no,
phone.
you are now. So the
All right.
screen now is
So,
showing take profit and stop loss. Yeah, so yes, the screen is active now. You see,
all
yes.
right. So what I'm trying to say, I've explained all these parts here, but I'm going to make it in a very brief way so that we can still meet up with our expected targets for the day. Now, I stop at this part, right? This angle here. Was it here?
After the bid and the ask price, the next
Yeah, this
thing
bid
that's
and
where
okay, that's take profit. Okay, very good. So
yes.
I wanted to talk about new order, and I said we'll continue with new order in the next stage. The only thing I said here was that once you open your MetaTrader, for example, now, and you click on any pair, this is what is going to pop up for you. Either you're using MT4 or MT5, this is what is going to pop up. Hereby you'll be seeing new order, open charts, symbol properties, advanced view mode. But our main target is to click on new order. If you've done your analysis already, new order is what I want to enter. That's where we have our take profit, stop loss, market execution, the market limit, how you place your market. Is it immediately or you want to set limits, either buy stop or sell stop. So all those things are what we are going to look into. But let's start with take profit and stop loss. Now, as I open it now, after clicking on new order, this is what it's going to display to you. It's going to show you something like this. Here you can see market execution, that which is instant execution. Do you get it? I'm using it in terms of crypto as well. Here you see market execution. If you want to buy coin, it can ask you, is it limit or market execution you want to do? Are you getting it? So you set whatever you want to set. Then the lot size is the one of 0.1 that you can see under the market execution. Depending on your account size, I'll teach you how to calculate the lot
Sorry to
size.
interrupt you, Mr. Moshood. Please, can you rotate your
Yes. Okay, I should do it straight. If I should do it straight, it's still the same thing. That's just the way I programmed it. And I don't stamp. If I should tamper anything now on my screen, it's going to affect audio settings. Do you get it? So that's why I make it slant so you can still see a bit that is still widely open. Do you get it? Don't worry. We are still going to do like a live session if time still permits us. I'll show you everything in summary of what we've done on a live scenario. Are we together? So let's continue. At this point here now, you see where we talk about market execution. Sorry. Oh, do normal. Okay, very good. So you see where we talk about instant execution simply means market execution. That means you should enter the market immediately. But if I should drag the arrow down beside that market execution, it's going to bring other options of limit order for me. Is it a buy stop, sell stop, buy limit, sell limit, and the likes? Do you get it? So under that instant execution, we have what we call lot size. Don't worry, I'll explain about lot size and leverage for everyone. So let's just focus on the main target for today, which is what? Take profit and stop loss. For now, take profit and stop loss. Then how can we know the take profit and stop loss? After that, your lot size where we say 0.1. Under it is where we have the ask price and the bid price. The bid price is the one at the front, and the ask price is the one behind it. How can you know the differences? It's through subtracting them. You know the bigger one from the smaller one. So the bigger one there is your ask price, and why the smaller one is what? Your bid price. Then below it, under that ask price, that's where your take profit is. And why the one with the red line, that has red line like that, under the bid price, is your stop loss. The green one is your what? Is your take profit. So I'm going to explain this very well. Just follow me up. Now, what are the forms of trading order? Like I said, I'm going to start with take profit and stop loss. Now, as a trader, you must not be online 24/7 in order to monitor your trade. Once you are certain of what your analysis is giving you or the fundamental news you are trading on, you don't need to stay on the market 24/7 monitoring the trade. That's why we have take profit and stop loss. Sometimes you can open a trade and leave it for overnight. Sometimes it may last more than 2 days. So what does take profit do? When you get to this particular angle here regarding take profit, like I said earlier, is a form of market order, whereby it tells the broker to close the trade for you and lock the profits when your trades move in a certain number of pips in your desired direction. Let's say, for example, now I want to enter this market. My main target from this price, from this current price I'm targeting 60 pips or 50 pips. Let's use 50 pips for example. So how will I enter the market? What will I set in my take profit? How do you know your take profit? From your, if you're entering a buy, from your bid price, that's where you calculate your take profit from. You set your take profit by adding that 50 pips based on the way we've calculated it, regardless of any pair you're trading, either it being Euro USD, USDPY, gold, whatever any pairs you are trading. I've explained how to calculate their pips. So from that current price, you are going to calculate the 50 pips into that current price. Then you'll be able to have the final answer, which is known as your take profit. Please, hope do you understand that? Do you understand that grammar? Okay, if you
Yes.
don't understand the grammar, I'm still going to break it down. Now let's go into a layman explanation now. Now let's say you enter a currency pair. Let's call it SS. That's Mr. Base to Mr. Quotes. Are you getting it? That's base to quotes, SX to ZZZ. And is currently on a $20 profit. You've done your setup already, like, this setup sure for me. But at the long run, maybe your phone went off. For you coming online back, you just, this thing has triggered, oh, and it's not a $20 profit, and I'm aiming 70 pips. Then it still remains 50 pips. Let me enter from this position here to catch the remaining 50 pips. Are you getting it? So from that point here, you've done your technical analysis or fundamental analysis. Do you get it? So you now find out that it will soon continue to rise down to your final TP. Now, I was talking something about stop loss and take profit. Now, if you can see the red arrow, it's indicating that that's where stop loss is being set. And why the blue arrow is where we set what? The take profits. Then below it is where you can then click to execute the market, either to sell or to buy, depending on your what, on your desired decision in the market. So let's continue. So, like I said earlier, is either you buy or you sell. Those are the two things we do in the market. You buy or you sell. Nothing, no any special case in the market. You buy or you sell. So after your analysis, let's say the pair would rise, then you open your MT5 or MT4 to buy. So at that point, you know you are targeting 50 pips remaining now because 20 pips have gone already. So the remaining 50 pips you are targeting, you are having a total of 70 pips. That's what you've analyzed in the market. So you don't want to be greedy. You jump into the market with a very low lot size of, let me say, 0.1, depending on the account size. Do you get it? Or 0.001. So in the long run, you set your take profits in the market, you set everything, and your stop loss, you set everything. After setting it, it's not a must for you sitting down to monitor the trade. You can just Just set it down, then go away. The moment the market
Network.
Mr. Moshood, can you hear us? We can't hear you. Mr. Moshood, if you can hear us, we can't hear you. Please, can anybody hear him or myself?
You can't hear him. Oh.
Okay, you can hear him.
No.
Yeah, I can hear you. It's just his network, I think so.
Guess his network is. Okay, everyone, please, can we just give him some space? Yes, his network has started tonight. Please, just give him.
He said he has to restart his phone, so we'll just wait.
Thank you. But I think, please, from what he has done so far, I hope it is clear enough. If it is not clear, please let's do it by asking questions or just drop whatever it is on the group, or we can ask here. And regarding the last task given, if there's anything that is not clear, please let's try and ask questions so for a better understanding. Please, you will soon join us, please. Please, you will soon join us back, please. Just give him a few minutes to be with us. And just while waiting, so we can just leverage on what he has said so far. So he mentioned take profits, and I don't know, we have expert traders here, and we have novice here, we have beginners. So from what he has said so far, I think we um should be able to share our knowledge and our experience on take profits. Have you ever executed any trade and just realized that you you didn't put your take profits or your stop loss, you're just trading. And even yourself, you are not convinced enough to opt out of the market, probably because you feel the market is in your favor and you are hoping, okay, the spike is still going. Probably you actually went for buy and market keeps on buying. I don't know, maybe anyone has had that kind of experience before. And what eventually happened to the account? Were you able to opt out of the market in profit, or you lost everything that you have made? Let's just try and leverage on what you have said. Hello, everyone. I don't know if I'm the only one here.
The expert trader should talk to us. I think the expert trader should speak.
We have expert traders there, but they're hiding. I don't think they want to talk. But then, based on what Mr. Amoshud had said, so he mentioned take profits. Just want to just leverage on that. Take profit is very essential when you're trading. As a trader, it's essential for you to have your take profits and stop loss. Immediately you execute your trade, you must always remember that those two are very important in every trade. Even if an AI is trading for you, an AI must have a stop loss and a take profits. Regardless of how favorable the market is, you must just get to a particular level. You need have to opt out of the market. And if market goes opposite direction as well, you must also have a level of loss you can afford to just bear. If not, you just discover that you are just if market is going opposite direction, you just realize that you are just losing everything. And before you know it like this, if you have $100, before you know it, you just see 88 minus $88. And before you know what's happening, everything is gone. Your free margin is minus. Everything is just minus. So it
It
is
seems
very, very important.
Mr. Moshid, are you back? It
It's
seems
not back.
because I could say his number. He has left again and is back again. You can go ahead, man. You can go ahead.
So sorry about that. I think his network is just, I don't know. But I think he's having a serious challenge with his network. Please, let's bear with him, please. He's here now, but I don't know. I think the network keeps on logging him out of the system. But he's back now. So hopefully he'll take over from where he stopped.
I think the discussion should go on. Once we can hear him, then we would continue.
Okay. So as I was explaining about take profit and stop loss. Also, if you have been following our signal, oftentimes if you drop signal and want to calculate the pips, initially I usually give pips, but then I realized that pips could be different, could differ. I might calculate pips based on my own entry position, and people will chat me and they'll be like, that pips is not up to that, or particular pips they have is more than that. So later I have to stop calculating the pips. So I'll just tell you to calculate your pips based on
Sorry, please,
what.
I'm back.
Okay, so you're welcome. So can you please take over? Are you not stable now? Can you hear me?
Yeah, I'm stable. I can hear you very
Yeah,
well. I can hear you very well.
please take over, please.
Let me share my screen, please. I'm so sorry. A call pop in. A call pop in. That's why it just disconnects me. And once it disconnects, everything just starts misbehaving.
Sorry
Sorry
about that.
for the sorry for the stress. All right, let's continue. What? Oof. Okay. So let's continue. I was explaining regarding take profits. So that's how take profit works from where I stopped, where I was talking about how you calculate it. Let's say you saw you had a setup of 20 pips and the market just suddenly started moving and you're not aware of it. You entered and luckily for you, the market moved in your direction and you hit your target of the 70 pips you've initially calculated. Now, making that 70 pips doesn't mean you won't set your stop loss. So I always say something and I'll keep on saying it every blessed day. Always be selfish to the market and don't be greedy to the market. It has a meaning. But once you get to that point, or once you get to that bridge, you understand the meaning. So your TP finally reached and you had your $70 profit. So even if you are not online and you set your take profits, the broker will take action based on what you've done on your MT4. So if you are not online, your MT4 through your broker server will close the trade for you automatically using your MT4 and add the profits to your account immediately. So once you set that particular price on your MT4, MT5, whether you're online or not online, it will surely lock the trade for you based on the TP, which is take profits, and the SL you set. So by doing that, you need to understand your calculation regarding the pips. I said that earlier. You need to understand how to calculate your pips accurately without any issue, regardless of either it's Euro USD, JPY, the special cases of PS, gold. You need to understand how to calculate it accurately in order to give you what you're expected to have in the market. I'll give you a practical example in our next class. I'll give you a live section, or because of this little mess that just happened, I don't think I'll be able to enter the charts because we have less few minutes remaining. So let's just move straight to what we are talking about. You can see the blue arrow now. That's the TP. Now, if you look at it very well, I set my take profit as what? 1.1796. What does that mean? That means I've set my TP at what? 50 pips. That's 50 pips. Are you getting it? Then, if you look at my stop loss at the other side of it, if you calculate it, you see that my stop loss is what? Who can get the answer for the stop loss? Who can calculate it very fast? Without punching calculator, just look at it and tell me. Who's in? Nobody?
50 pips.
No, I'm not talking about take profit. I'm talking about the stop loss now.
Your stop loss is 1.729.
29,
Your
yeah.
stop loss
But
is
how many pips? How many pips is that?
1.1729.
Yes, how many pips is that?
When you take that away
20.
from no,
You take it away from your bid price, not from the ask price. The bid price is what you use. That's your own. That's
the
where you
bid
are
price
working on.
is 1.1746, right?
Exactly. Yes. So if you should add 50 pips to it, that your bid price is what is going to give you your 50 pips in your take profit. Are you getting it now?
Okay. And then the stop loss is that should be 23 pips.
Are you certain about that? Well, let me just make it easy. Our stop loss here is 15 pips.
Okay.
Are we together?
Yes, you are
Oh, sorry.
together.
Is it? Sorry, I made a mistake. It seems it's 17. Yeah, we should calculate it. It's 17 pips. 17 pips. So let's just proceed. Don't worry. I will explain better for you guys. So that was what I was about to explain, and you guys have even said the answer already. Do you get it? So this pair Euro USD, the current price is what? 1.1746, and we are targeting 50 pips. So our TP is going to be what? 1.1796, and that's what we're having in this blue line here. Can we all see it? This blue line. That's what we have in there. So let's continue. So how do we now calculate for stop loss? So what is stop loss? So this is a form of trading order that tells your broker to close your trade if the market goes against you at some number of pips to prevent huge loss. Instead of you losing all your money, stop loss is always there to prevent losses for you. Please, it's always essential to set your take profit and stop loss when trading or while trading. Please note one thing. There's nothing called master setup. Nothing like that. And there's no any strategy that is 101% in the forex market. So every trader records some of their losses. Some may hide it, some will share it to showcase that. You should know that I'm a real trader. I didn't say I'm not making losses, but I ensure that I'm applying what? Proper risk management. Even me too. I also occur losses too as well. I can show you. I do have losses too. But applying proper risk management will also put you in shape and also keep you in consistency and also give you consistency in the market as well. So these are the time analysis that feel like you trade, you set up, you do some setup, it fails. It's not that your setup is not working. It's just that at that current situation in the market, the buyers or the sellers are overtaking what you are doing. They are trying to create you, they are trying to make you like a liquidity in the market. Not that your setup is not active. Your setup is very okay. So don't look like, my own setup is not, how is this guy catching this? Don't feel that way. Whatever setup you want to learn, whatever strategy you want to learn, focus on it, build on it. It's not what you can just do overnight and start seeing money from it. It's what you grind together, build up with it, master it. To a certain point, not all the time you have to draw all your charts before knowing the next step you have to take. So it's normal. It doesn't mean you didn't do well. You've done the best in the market. So always prepare yourself for some cases like that in the market. You need to activate your stop loss. It's very, very essential. It's very, very essential in the market. So how do we do stop loss? So you can see the stop loss here now. For example, the stop loss there I'm putting here under Euro USD is that my bid price is 1.1747 and my SL is 1.1737. So what is the difference between them? The difference between them there is 10 pips. Please note, I'm going to make a statement very clear. In this same Euro USD, I just explained that is what is 10 pips difference. You subtract from the current price to give you what? Your stop loss. Are we getting it? From the current price, you subtract 10 pips to give you your stop loss. If you are buying, are you getting it? If you want to buy, you subtract from the current price to give you your what? To give you your stop loss. But if you are selling, that means you are going downward in a downtrend. If you are selling, you add 10 pips to the current price. That's your stop loss. That means you are using 10 pips stop loss. Then you now subtract from that current price to your number of pips or your TP, where you're expecting your TP to reach. So you subtract. Maybe you want to do 50 pips, you subtract from it. Then whatever parameter you get, that's your TP when you are selling in the market. So that's how the calculation goes. Because you are buying, we want to make the market go up. So as soon as it started going against you, or it's going down to a certain number of pips, it means it's going against you. So you have to accept losses and move out of the trade. Don't force a trade. Don't be greedy to the market. So these are important things you need to know. These are important things you need to know when you are buying and when you are selling as well. So your stop loss when you are buying, current price minus what? The targeted pips, because you are buying. I didn't intend the price to go against you or to go down. So in case you are selling, your SL, the current price plus the target pips. Can you see the difference now? That's why I bold it. For SL, the current price plus the number of targeted pips. And while if you are buying, and while if you are buying, the stop loss must be what? Current price minus the targeted pips. That's what I just explained a few minutes now. So let's proceed. Because you are selling doesn't mean that price will not respect you sometimes. So please take notes. However, you don't have to set your stop loss so tight, because when setting your stop loss so tight, like 10 pips, market tends to do retracements. Please, market tends to do retracements. Always ensure using stop loss within 17 or 20 pips to 25 or 30 pips, depending on what you are targeting, your risk to reward ratio. Do you get it? No matter what price you are calculating that you want to hit as a target, please ensure to apply proper risk management. 10 pips can kick you out in the market, no matter any house setup you are doing. 10 pips is just too tight. At least give it a breathing space. So let your stop loss be a bit far from your current price. The reason is that we have something called retracement and pullback in the market. The fact that the market is supposed to go up doesn't mean that it will not go up, or it will just be dancing all around like a consolidation state. But what I want you guys to know is that when you expect the market to go up, the market will not just go up immediately straight like a pole. It must surely retrace, it must surely reverse down a bit to grab liquidity, to do whatever you want to do, to maybe to respect your Quasimodo level, to respect your supply zone or demand zone. It will always come back to grab liquidity before moving. So those are the things about stop loss and take profits. Please just take your time, go through all what I've explained when they drop the link in the in our main chat, so you can see everything there and you can revise with me. So market goes up and down. That's how the market moves. So please, there are things I just want you to understand. I'll be stopping here for tonight. So one thing I want you to understand is that I want you to just calm down, believe in yourself, understand the concept of the market. What is the market doing? Like I said earlier in our other classes, focus on either one and maximum of 3 pairs. Try to understand, how are they moving? Why are they moving in this direction? What's the cause of this direction? What's happening? What kind of momentum is the market building? Are you getting my point? So just take your time, focus, and read through again. You will grab it. Or watch through again. You will grab it. You are free to ask your question, observation, and comment. Are all welcome in our main chat. So, like I said, I'll call it a day at this point. Good night. We shall continue on Wednesday.
Okay, thank you,
Let me just
Mr.
give you something. Sorry, just few things. There are 10 things I'm going to drop. I'm going to drop it in the main group. And those are the things you need, like a motivation on about trading, you get? So I'll drop them in the group. Thank you so much.
Well, thank you so much, Mr. Moshood. Thank you, everyone, for participating tonight. Thank you. And I'm sorry about the network interruption. So I could see some people, some complaints on the group. You just take it easy, okay? There are days like that. Even if you have been, we're all on this same space. We all understand how it could be in some areas when it comes to network. So please,
Yep,
let's
ma'am.
be on the same, please. So whatever it is, whatever question you have, please, you can drop it on the group, and the link to YouTube channel will be uploaded as soon as it is uploaded to be shared on the group. So, and the task given, the last task will be reviewed on the group and to be attention. Thank you
I
so
don't
much.
know. Can we get this document, this explanation in like PDF or something?
Okay, for this, right? For the class?
Yes, like something we can read up, especially this one, because the network interruption for this very section was quite much. So it's
Okay.
something we could read up and follow through. Should be cool.
Okay, walk around that. So we'll get back to you on the group.
Thank
Whatever
you.
it is, we'll get
Thank
back
you.
to you. You're welcome,
All
sir.
right.
So that's just for today. Thank you all. Thank you so much for attending the class. You have a
Thank
good
you.
night.
Thank you. Good night.
Yes, sir.